Hey, this is Matt from InvestiQuant. Today is Tuesday, March 8, 2022. Yesterday was a big down day for the markets. The markets trended lower from the open, closing right at the lows of the session and down sizably. So we're going to take a look at what has happened following a big down day here in a similar market environment. Let me go ahead and get this set up here. I've grabbed all four instruments. The setup is based upon entering the market at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading higher in the overnight session. I am going to add that to the test by going to the opening filters, gap direction, and clicking on gap up. So that means we need to open above the prior day closing price for this to be true. All right, the next thing I'm going to do is describe yesterday's action. So I'm going to use two pieces of information. The first one I'm going to use is the close yesterday was more than 1% lower. And I'm just going to grab these from the active today because all of these things over here are true for today. So I'm going to grab this one right here that says close greater than 1% lower. I could do the 2%, that'd be true as well. But I want to keep more samples in here. So I'm going to go with the 1% just to get more samples. And then I'm going to also add that it closed near the lows of the session. So I'm going to say the close was in the bottom 25% of the daily range. So a sizably larger move lower that closed near the lows of the session. The next thing I'm going to do is go to the indicators library and put us in a similar market environment. We closed below a 10 and below a 200-day simple moving average. Now I'm going to click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you gap up following a day that was at least 1% lower and closed near the lows of the session in a weak market environment. Historically, we've got 110 samples here in the S&P. We've got 88 in the NASDAQ, 114 in the Dow, 145 in the Russell. The win rates on these are just mildly favored. S&P coming in, 55% of these have closed above the opening print when this is true. For the NASDAQ, it's 56%, for the Dow, 61%, and for the Russell, 53%. If we look at the average moves, the S&P has a sizably larger average win compared to its average loss. For the NASDAQ, they're a little bit closer in size. The Dow has a much larger average win compared to its average loss, and then the Russell is pretty similar in size for its average win and average loss. So two of them have much larger average wins than their average loss, and all four of them are at least mildly favored. None of them are super strong, but they're all mildly favored on the win rates. So hopefully you found that helpful. Good luck today. We'll see you next time.